Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Stocks cheer election result. The stock market seemed quite happy with the results of the election on November 5th. The S&P rose roughly 5% in the week following the election, and more economically sensitive small cap stocks were up roughly twice that much. So why is the market so happy? Well, for one, there was some fear that the election result could have been unclear, too close to call, or contested for accuracy. So the clarity of the result is something that markets always prefer. In addition, the election of Donald Trump is broadly seen as pro-business, good for keeping taxes low, and likely to bring reduced regulatory burdens, all things that stocks tend to prefer. Now, alternatively, opponents of Trump claim that his desire to raise tariffs could prove inflationary and harm global trade. Now, that remains to be seen, but for now, the markets seem to be less concerned about those things and more focused on the potential for continued economic growth. Our view is that smaller companies are likely more attractive now on a relative basis, given that they tend to be more sensitive to tax rates and regulatory burdens than large companies. And for that reason, we are adding exposure to small cap stocks in client portfolios. For this week's featured insight, political bias can harm investment results. Well, since I just got done discussing the election results, it's probably worth pointing out that you shouldn't let your politics guide your investment decisions. Whether you're happy about what happened on November 5th or not, there are plenty of examples of when the markets did well, and poorly for that matter, under the leadership of both parties. There's very little statistical significance of one party being better or worse when it comes to the stock market, and the combination of the president's party and the control of Congress also play into the dynamic. Bottom line, you shouldn't let politics influence your long-term investment plan. Emotions tend to get in the way of good decision-making when it comes to money matters. Looking ahead, year-end rally seems likely. November and December tend to be very good months for the stock market on average. And now that the election's out of the way and earnings season is wrapping up, there will be a bit of a vacuum in terms of major market-moving news. Now, that could be a good thing or bad thing, but with the economy looking like on fairly solid ground, it seems unlikely that anything other than some unknown negative geopolitical event would knock the markets off course. Buyers want to get money to work before the end of the year, and sellers will probably be waiting until 2025 to avoid unnecessary capital gains with so little time left in 2024. I should caution, however, that markets tend to be most vulnerable when it seems like nothing can go wrong. And given we're at or near all-time highs, investors can still take the opportunity to rebalance portfolios to make sure they're not taking too much risk in any one area. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.